If you're looking for the best place to buy, sell, and save your crypto, then you come to the right place. I'm Crypto Bo, and in this video, I'm comparing BlockFi and Coinbase. Let's start by talking about the sign-up bonus. Coinbase is pretty straightforward. They offer $10 in Bitcoin for buying $100 of cryptocurrency on the platform within the first 30 days. BlockFi, however, is a little bit more complicated. It's based on how much you transfer in to earn interest on the platform. You can see here that it's a pretty complicated release schedule ranging from $10 to $250. $10 if you transfer in $100 or more, and $250 if you transfer in $100,000 or more. Now, obviously, the return on investment goes down significantly as these numbers go up. My suggestion, go to Coinbase, sign up if you haven't, buy $100 worth of cryptocurrency, get that $10 reward, and then transfer that $100 in whatever coin of your choice over to BlockFi so you get the $10 reward there. That's a return of $20, which is a cool 20% on a $100 investment almost immediately, actually. I think Coinbase will pay out maybe 2 to 3 weeks later. You'll eventually get it, but it won't be as immediate as the BlockFi one, which I got over the course of like 3 hours or something like that. So again, click the link in the description, go over there and get that 20% return. Now, this is as good a place as any to remind you that I am not a financial advisor, so don't you dare listen to me. So let's get into it. So let's talk about interest rates. Now, BlockFi basically wins in all of these categories because Coinbase doesn't really offer interest rates. There is no interest rate on holding cryptocurrency. Now, this may be because they think interest-bearing accounts are securities, as as we'll see later, the New Jersey, Texas, and Alabama financial authorities allege, but who's to say? As far as rewards, there's no incentive to hold Bitcoin on Coinbase. There's a 5% reward for staking your ETH in the 2.0 contract on Coinbase, but then you can't move it anywhere. It's illiquid until ETH 2.0 upgrades the network, and who knows how long that'll take. But it is 5% annualized returns, which is not bad. And then as far as stablecoins, they only offer 2% on DAI and 0.05% on USDC. You can get a bit of a better rate if you're using their crypto debit card, but more on that later. Whereas BlockFi is offering 4% on Bitcoin and Ethereum and 7.5% on all stablecoins, including DAI, USDC, and GUSD. As far as anything else to note, BlockFi is pretty standard. There's nothing really else there, nothing eye-popping at least. Everything ranges from about 1 to 7.5%. Some of the interest rates are a little bit lower. I think Zcash is like around 2% right now. So if you really like privacy coins, then I guess you can do the returns on Zcash, but no Monero on either platform. Whereas Coinbase will allow you to stake your Tezos, Algorand, and Cosmos, and those are not staked in the same way as the Ethereum 2.0 staking is going. So you can actually stake them and unstake them at intervals, and they'll give you around 5% if you are really interested in those coins. As far as payouts, you get monthly payouts with BlockFi, which is not as good as some of the other services which offer daily payouts or even weekly payouts, but Coinbase pays out continually. And again, the only place where you're getting that is DAI and USDC, but you can see a little tracker if you're holding a DAI balance, adding up the 2% that you're getting per year, and so like they're paying it out constantly as it's held in your account. So there's no period where they release that funds after a day or a week or whatever. On to borrowing. Now, again, in this category, BlockFi, if you're looking for a cryptocurrency lender, then Coinbase is not for you. They do institutional lending, but they do not do individual lending, whereas BlockFi, you can take out a loan based on cryptocurrency collateral. That loan's interest rate will range from 4.5% to 9.75%, depending on your loan to value ratio. So if the loan is 25% of the value of your collateral, then you'll get that 4.5% rate. Whereas if the loan is 50% of the collateral you have locked up, then that's 9.75%. Now, you do have to be careful because you have to make sure that you're maintaining the right loan to value ratio, or else your loan could get liquidated, say in the event that your crypto collateral goes down in value. So it's kind of like a margin account, and you need to make sure that you're topping it up correctly to make sure that you're maintaining the right ratio. Quick commercial break. If you're enjoying this video, then please leave a like and think about subscribing so that we can start ranking better than Nate Martin of 99 Bitcoins, who, I don't know if you know this, in 1989 gave Magic Johnson AIDS. But let's get back into it. As far as security is concerned, Coinbase is pretty good. It has two-factor authentication, has address allow listing, they have never been hacked, and you can time lock all of your funds for whatever reason you want. They also have FDIC insurance on your dollar balance, which is pretty good. BlockFi is, pretty much the same. They're comparable here in terms of security. BlockFi also allows you to do two-factor authentication. Their custodial funds are secured actually also by Coinbase and by Gemini and by BitGo. So they have a pretty good custodial wallet security system. They also address allow listing. So pretty much a wash here. They're both pretty secure. Neither of them have been hacked. So there's not a lot of differentiation. You could argue that Coinbase is maybe a little bit more secure, but I would say that that's largely a marketing thing rather than them actually being a little bit more secure. BlockFi uses Coinbase as a custodian of its funds, so they're pretty intimately intertwined in this area. Neither of them have tokens, which to me means that neither of them are presented with the same sort of regulatory risk that a platform like Celsius or Nexo or Crypto.com would be. Although, that said, as I mentioned earlier, BlockFi is currently being sued by the New Jersey, Texas, and Alabama financial authorities, saying that their interest-bearing accounts are securities. And we've yet to see how that's going to play out in court. None of those states have actually banned them from operating yet. They've given them cease and desist letters, but they keep on moving the date where they have to stop issuing new accounts down the road. And I assume this is because BlockFi is in conversation with these regulators, and we'll see what happens in terms of whether or not it's regarded as a security. But, that said, BlockFi is a little bit more of a risk here, only because Coinbase doesn't offer interest-bearing accounts. So if you're looking to earn interest, yeah, BlockFi is obviously going to be better because they give you interest on your coins, but there's a risk that is, technically a security. So there's a little bit more regulatory risk on the BlockFi side. In terms of regular old risk, yeah, they both have risk. Coinbase is probably a safer option, both in terms of regulatory risk and in terms of big picture risk, because they have a lot of institutional backers. They're a public company, which means that they're well audited. They have a lot of collateral, they have huge insurance programs, and they have FDIC insurance on dollar balances. So Coinbase is a little bit more insulated from big picture risk, in terms of black swan events, when the larger economy collapses. And yes, I said when, not if. But the nature of black swan events is that you don't see them coming. Coinbase is probably in a better position to weather those storms than something like BlockFi, but BlockFi has a pretty big insurance program as well. They do a little bit more, obviously, individual and institutional lending in order to generate the sort of returns that they get. So that's something to think about. Is basically a good rule is the higher interest rates you see being offered means there's more leverage and more risk on a platform. And that means that if you expect the economy, the wider economy, to collapse in the short term, those platforms that offer the best interest rates are the ones that are going to be at most risk of systemic collapse. Certainly something to think about. Certainly a reason why you might prefer Coinbase over BlockFi. Now, are they both exchanges? Yes. Coinbase basically is an exchange. That's all it does. It's a custodial wallet exchange system. So you can swap coins, you can buy coins, you can sell coins. BlockFi, you can buy coins and sell coins and swap coins as well. Their list of supported tokens is much smaller, and you can't hold a US dollar balance on BlockFi. Anytime you transfer in money from your bank account to BlockFi, it's converted immediately into GUSD, which incentivizes you to save on the platform, but they don't hold a dollar balance, which means that there is no FDIC insurance for BlockFi. And like I said earlier, BlockFi offers a much smaller list of cryptocurrencies than Coinbase does. And basically every cryptocurrency you buy on BlockFi is something that you can also earn interest on. Whereas you can buy a lot longer list of coins on Coinbase, but it's not comparable, say, to Crypto.com or to Binance, where you're going to get a huge range of currencies on offer for purchase in US dollar balances. However, Coinbase and BlockFi both still allow you to buy, say, Bitcoin or Ethereum, and then go to Uniswap or Rune and swap them for whatever token is listed on there, which, is basically endless. You can still use SushiSwap if all you're using BlockFi or Coinbase as is your fiat on-ramp. Speaking of which, are there fees for fiat transfers? There's no fees for BlockFi for an ACH transfer, but like I said, it's immediately converted into GUSD, so you don't actually hold a dollar balance. Now Coinbase, anytime you transfer money in, yes, they're going to take a fee. They're going to take either $2.49 or 2.49%, whichever one is larger, for any buy of cryptocurrency that you do on the normal platform. Now, with that said, you can transfer in money for free with an ACH transfer. Then if you transfer it to Coinbase Pro, you'll only pay a 0.25% fee, and you won't pay any spread fee, which you will pay if you pay on the regular platform. Now, in terms of withdrawals, Coinbase has no limit on the number of withdrawals that you can make in a month. You can withdraw it to your bank account at any time, but BlockFi, obviously there's going to be fees associated with selling, a 1% conversion fee typically, and up to a 2% spread fee. Again, you can mitigate some of those fees by using Coinbase Pro and setting your own price, but you will pay fees for the conversion. You won't pay fees for withdrawing your money back to your bank account. BlockFi is the same way, but they only offer one free withdrawal per month. So if you want to withdraw multiple times, then you're going to end up paying a little bit more money. Now, in terms of the other features, Coinbase and BlockFi are actually pretty different. BlockFi offers a crypto credit card that's in full release right now. You can click the link in the description to go and get in the wait list for the credit card, but they're offering it, to everybody right now, and all you need to do is apply. But after waiting your turn, they're offering the credit card, and so you can just go and apply for that. Now, Coinbase doesn't have a credit card, but they have a debit card. Now, the way this debit card works is you can spend cryptocurrency with the debit card, but there's going to be a 2% conversion fee for any cryptocurrency you spend that isn't USDC. Now, USDC is the stablecoin product of Circle and Coinbase. They're in partnership producing this stablecoin. So if you hold a USDC balance, you can spend from that and get 4% cash back. I think this is a pretty cool feature because it allows Coinbase to start functioning as your bank instead of having a traditional bank, and then you get paid in crypto for having a stable US dollar denominated balance. So if you want to make the full transition to being bankless, please don't sue me, Bankless Podcast, then Coinbase is a pretty good option for you. But if instead you want to earn interest on your cryptocurrency, or if you want to take out a crypto loan, then BlockFi is going to be the better option. My recommendation is, again, to use them in tandem. Click the links in the description, use Coinbase as your fiat on-ramp, your way to buy cryptocurrency, use Coinbase Pro to reduce your fees, and then transfer it over to BlockFi in order to earn interest on your account. In terms of comparison, it really depends on what you want. Thanks for watching. Like and subscribe if you don't think I wasted your time, and remember, Nate Martin is a monster.